Let's talk GameStop today. There's reasons to buy, of course, reasons to sell. Comment down below. Let us know which one you're leaning towards. Let's get started. Guys, welcome back. Today, we're discussing one of the most popular names in the industry, GameStop. It's a stock that started the meme stock craze back in 2021. And after that, suddenly the term short squeeze was in play everywhere. It still is today. Everywhere you go, people are looking to recreate that kind of price action. It's fun to watch, even more fun to be involved with. Leave us a comment down below if you are one that is dabbling in the action. But the question here really is it realistic to expect more of that going forward? Thomas, you had wrote an article recently where you outlined reasons GameStop could pop and reasons why it wouldn't. And I want to get into some of that today with our viewers. So why don't we start with the good news first? What do you have for us?
Yeah, the results were pretty decent. We had top and bottom line outperformance driven by the company's diversification and efforts for efficiency. As far as diversification goes, hardware was flat, software was up, collectibles were down. Decent report. Margins widened on efficiency and a little bit of sales leverage. Most importantly, the company's loss narrowed from over $100 million to under $5 million, which is a significant change and puts them dangerously close to profitability.
Chris, I'm going to go out on a limb here, but GameStop is a stock you watch for entertainment purposes only, right?
Yeah, I mean, entertainment's the right word. I have concerns about the company just from a kind of a how are they going to make money sort of perspective. But, I mean, the best thing and the worst thing that happened to GameStop was the short squeeze back in 2021. Our own Jayu, he wrote an article. I think you've got it linked in the comments, Laycee. Mm-hmm. And he really explained that there were a lot of unique circumstances that happened at that time. And those events are not likely to repeat themselves again. But opium is a very powerful drug, and there's some traders that are very addicted to it and believe that that's going to happen again for them with GameStop.
Okay, but that legendary short squeeze wasn't the company's fault. I mean, wasn't it based on the company's fundamentals?
Well, not totally. I mean, analysts were souring on the stock because of the company's business model, but the whole short squeeze took on a life of its own, and that was completely disconnected from the business. The problem for me is when I look at the company just from a standpoint of how do they make money? How are they going to make money in the future? I don't see a really strong story. They're trying to make a difficult pivot, and I give them credit for that. It's just not going quite the way they planned. Now, I want to be very clear. I'm not suggesting that the company is going to go bankrupt. When I look at their earnings results, I do see that the revenue is improving and the earnings are getting as Thomas said, they're getting very close to profitability, and with prudent management, they may even get there. But I just don't see a there. There's nothing with GameStop right now that I see that makes me say that's something that they do better than any other competitor.
Thomas, why don't you talk to us about the balance sheet here? You had said it's still in solid condition with no immediate danger of collapse, but that's not promising, is it?
Yeah, like Chris said, the company's not in danger of any kind of immediate collapse or going bankrupt, but there are some problems. Cash burn can't go on forever. If they don't regain profitability, there is an end in sight to the business. But what's happening right now is that assets are becoming impaired while liabilities incrementally increase, and that puts the company in a bad position. As far as the mix goes, I see some bad signs about the consumer in the mix. Hardware sales were flat, which was good, or good enough anyway, no growth. Software sales are up. Software sales being up tells me that gamers are leaning into their old machines, trying to leverage that old investment in gaming with new software. That's not going to spur a new round of spending in the industry. Mm-hmm. And then with collectibles being down, that's a really bad sign. Collectibles are supposed to be the company's growth avenue, and it ain't growing. And then we look at the inventory. A lot of the bottom line strength was due to inventory reduction. Now let's think about their inventory. It's old games and old collectibles that people aren't buying. How much of that inventory is unsellable?
Chris, so it seems that the analysts have no love for GameStop. Why are they so hesitant to jump on board?
Laycee, it's not only that the analysts have no love for GameStop. I mean, there's just very few analysts that even cover the stock anymore, which is telling in itself. I could only find, through a couple of different sources, including MarketBeat, I can only find, I think, 3 analysts that are even covering the stock. All of them give the stock either a sell or a strong sell rating. And that's unusual in this day and age for an analyst to even go out on the limb and give a stock a sell or a strong sell. So here's what I look at. I think analysts are seeing the same thing that Thomas was just talking about. I mean, the company's trying to make a difficult pivot at a time when I guess the example, I was going to use an example like Netflix, but I think a better example might be Kodak, is just technology has leapfrogged the company and they're trying to catch up in an era that it's going to be very hard for them to establish themselves and plant their flag somewhere. Thomas is more of a technician than I am, so I'm sure there's a trade in here somewhere. But to me, this just looks like a stock that should be a penny stock. And analysts kind of agree with that. They have a price target of about $6 as a high target. But, you do have a group of passionate investors who I think believe that the stock could have a repeat of what happened in 2021.
Right. Well, I had read recently that directors at GameStop are buying back shares. I mean, that's generally a positive, right? What do they know that others might be missing, Thomas?
Yeah, I really can't say that. The board of directors at GameStop is distinguished. These are some smart people. I'm sure they know something or see something that I don't, but I don't see it, right? And along with their purchases, the executives are selling. So there's a balance here. Directors see something, execs don't. So there's no conviction in that market that I can tell.
Yeah, and to pick up on that, I was looking at the last letter to the shareholders that GameStop sent out, and I know that they are making a concerted effort to encourage their board members and executives to buy shares of the stock so that they have skin in the game. And while I can admire that, that's not the same thing as saying they're buying the stock because they're convinced of the company's fundamentals. They're basically doing it because they're sort of being ordered to do that.
Yeah.
Yeah, right.
For sure.
Yeah.
All right. Well, it seems that this legendary meme stock continues to be the subject of fascination in the market today. And while there may be some positive indicators, it's pretty clear that we are remaining cautious on this one. But whether you're in it for the entertainment or still holding out hope for a repeat of the 2021 short squeeze, it's crucial that you stay informed, of course, and you make your investment decisions wisely. That's why MarketBeat is here to help. So go ahead and check out the resources I have linked for you down below. Don't forget to like this video, subscribe, share with others, and let us know your thoughts in the comments down below. Until next time, we'll talk to you guys soon. Thanks, guys.